Chilotam. I don't want noise. I don't want noise. I'm in a class.
All right, guys, it looks like it's 10 a.m. Good morning. Again, this is Wednesday. Before we get started again, I wanted to clarify one thing. I went into Connect and I was looking at our assignment 2 dates, and there was a mistake on the chapter 2 quiz. I think it still said, I forget, it was like the 13th, I think, as the due date. Anyway, I went ahead and updated the due date. So in case you were wondering, just remember that the chapter 2 assignments, the homework assignment and the quiz assignment in Connect are due this Sunday. Okay. Yeah, we're still in chapter 3 right now, but remember I'd kind of given you an extension on the chapter 2 assignments. So remember, if you haven't attempted the chapter 2 assignments just yet, remember those are due this coming Sunday. And then today we're going to continue with the rules of debits and credits. I intend to try to go through some exercises in the book. And I'm going to try to look at a couple of your actual chapter 3 Connect assignments as well. There's a couple of good ones on there, even though I've already illustrated these, but I'll try to look at that again today a little bit with you. And then of course next week again is all about chapter 3. And just kind of giving you a heads up, if you start to look at the time and the calendar, just remember that exam 1, I give you an exam 1 after we complete exam 3. So that's just around the corner and that's coming up as well. It's not too far away. So before I get back into chapter 3, does anybody, looks like I'm looking at participants, I got about 8 people in the class today. There'll probably be some others joining us a little bit later. Does anybody that's in the class right now have any questions or any issues before I get started today? And even though I muted everybody, that way it doesn't distract. I had some issues with my Monday night class. A couple of people were not muted, and then I was going through a couple problems with them, and some people couldn't, they were getting distracted. So, but you can always unmute yourself. You have that option. But does anybody that's in the class right now, again, just looking at everybody's in here, does anybody have any questions or anything at all they want to address before I start today's session with you? Anybody? All right, if not, that's awesome. Let's get started. So I'm gonna go ahead, oh, I got one question. Let me just check it out. I didn't see that. Let me check it out. Yeah, the accounting language, somebody commented on just the reading part of it. That's a good point. And my Monday night class had similar issues. We were working several problems with how the language is worded in accounting, and quite literally the way you'll get it is just by practicing and studying it. It's a little bit different, and then of course asking questions if you're not seeing it. The best way I can help is for you to ask me questions. I can work a ton of these problems. I can do as many of these problems as I can in our time period. But outside of our sessions, since we only meet 50 minutes, you've got the rest of the week, and you have to manage your time. But in between our sessions, the more you worked, if you think of anything that you're struggling with and you're not seeing, that's a great opportunity to email me or let me know even during our session. So, and again, I'm spending a little extra time on each chapter, being in this LVL type of format. So I'm not rushing it at all. And I know everybody's busy, but at some point in time, because I'll find out when we get to the assessments on the exam and so forth, how you're doing. But before we get there, I'm hoping to, trying to make sure that your experience in here is successful and that you do a good job in this class, and that you want to even take more accounting classes. But yeah, the language, it's just something you just have to really just get used to. But I think by working and practicing the exercises, that's how you're going to get it. It's not just, if all you do is read the problems or read the chapter or watch the videos, I mean, that's good, but you truly are not going to get this stuff until you just sit down and start working out the problems. It's, you know, that's kind of like maybe a similarity to a math class. You have to actually do the work. You can't just watch me work it as I record our sessions, but I record these sessions to give you examples so that you can go back and then practice. And one of the things I'm going to try to do today, if time permitting, I'm actually going to bring up a couple of our homework problems in Connect. And, you know, even though you have the answers to these, I'm going to try to show you a little bit in terms of how to read some of these as well. But again, that's my goal today, is just to practice, spend as many time reading these problems with you. And again, the key in this chapter is you got to get the debit credit rule, the increase decrease. We're still, accounting equations is still the foundation, but in chapter 3, we're adding the debit and credit rules. And I don't want you to lose sight of the fact of the financial statements is where we're at. That's the end goal, is to prepare the financial statements. And one more thing I just wanted to add, because nobody said anything on Monday's session, but on my Monday evening class during our session, there were times when my voice came across staticky and they couldn't hear me, or it was very, it just, you know, they couldn't understand what I was saying. And we think it was a technical computer error, or the internet connection might have been bad. So please, if anytime during today, if something's going on and you can't hear me and you're just not following it, let me know, or send me a chat, or send me, you know, because I can read your chats. Send something to me, and then I'll try to see if I can't fix it. I think it was just an internet connection issue on Monday night with my Monday night class. But okay, all right. So if nobody has anything, I'm just looking around. Looks like we've got a couple more people joined. Let me start. So I'm going to go ahead real quick. I'm going to do a couple screen shares. Let me first get my my PowerPoint. Hold on, let me find it. I had it pulled up. Yep, there we go. Okay, so just a recap real quick. And I gave you these rules on Monday, so I'm not going to rewrite them again. But just remember that we're into this thing called the rules for debits and credits. And I gave you this in my format where we've got the T account. You need to remember that a debit and a credit, that's new terminology. When we're looking at a T account, it doesn't matter any account you're looking at, you'll notice, you should know that the debit is always the left and the credit is always on the right side. Okay, that's going to be universal for every account. The rule, though, is once you get that, is you have to know the effect. If it's an asset account or a liability account, you have to know how that debit or that credit affects that account, whether it's an increase or a decrease to the account. So, like, for example, with the asset accounts, well, let's start with cash. Anytime we have a transaction involving cash and cash is increased, we will say debit cash. Anytime cash is decreased, we will say credit. And that's what I mean by applying these increase, decrease rules with debit and credit. If you've got accounts receivable, which is an asset, accounts receivable will increase with the debit. It will decrease with the credit. If I'm looking at liability accounts, such as accounts payable, notice it's just the opposite. Accounts payable will increase with the credit and decrease with the debit. And so the reason I'm just recapping that for a moment, because, you know, some of my Monday night students were a little confused on a couple of these things. And I just try to remind them, like I'll remind you, if you go back and look at the accounting equation, the way we were going through those transactions, we would just say increase or decrease. So if cash increased, we'd say increase cash, which is an asset. If cash decreased, we would say decrease cash, again, because it's an asset. Now, only thing we're doing different now is we're not just saying increase cash, we're saying debit. Okay, that's what we're adding. That's the new rules we're adding in chapter 3. And then remember that as we go through these, we don't just say the accounting equation is equal. We'll say the debits have to equal the credits. So every time we debit an account, we have to have a credit to offset that. All right, so, and I think, I forgot to write one thing down, but I believe last time during our session, I believe I walked you through some of the basic transactions. Like, let me pull this up. Like, we did some purchases for cash, Like here was one where, you know, here we've got our 2 T accounts. It says they issued a check to buy some office supplies. And so we have to think, okay, increase and decrease 2 assets, right? One asset increases and another asset decreases. Office supplies, which is an asset, is going to increase. So notice they debit it. That's the debit side. Cash, check is cash, which also is an asset, which is decreasing, is going to be credited. So here's a debit and there's a credit. And notice you always have a debit should always equal whatever your credits are. Okay. So, and again, I intend to do as many of these as I can with you. And I know I walked you through several of these on the PowerPoint on Monday. I don't believe, let me go to this one. If you look at this account right here, I'm sorry, the slide, you'll notice how they give us all these various T accounts. You can see that. And you'll notice that you've got the accounting equation is balanced. You'll notice that you've got various transactions that are recorded on both the debit and the credit side for all these accounts. And then what they did is they came up with a balance. And of course, what we mean by a balance of an account, just to kind of recap that, a balance of an account is when you take the debits and the credits, you add up all the debits, you add up all the credits, and you just subtract. That's all you're doing. So in this example, you had cash, had 100,000 debit, you had 17,000 of credit. The difference is 83,000. They put that on the debit side. You always put the balance on the side that's larger. And coincidentally, that should also be the increase side. So cash has a debit balance. Again, it's an asset. And the normal balance, I gave you that rule, the normal balance is always said to be the increase side. But I do like this slide. If you go back and review this particular slide, this slide not only gives you the T account format, but it also plugs it into the accounting equation just to show you that you're still balanced. Just to kind of remind you that what you did in chapter 2 is still the underlying happening in chapter 3, just that we don't write out the equation every single time. Okay. All right. A couple more things, and then I'm going to jump into a couple problems. One of the things we'll have in chapter 3 up through chapter 6 is anytime we have revenue, you know, a business earns revenue, they like to use the term fees income. I had several questions in my other class about people were confused when they read some of the chapter 2 problems. They didn't realize what the revenue account should be. So we're using fees income. That's what the textbook uses. Every time there's revenue where it says services performed or completed, we will use fees income for the revenue account. And of course, in this case, we've got cash. So notice it says recorded $36,000 of revenue from services sold for cash. So notice we've got cash, asset, fees income, which is revenue. We're increasing cash, so that's why they're debiting cash. And you're increasing revenue, which is why we're crediting revenue. Okay, and I'll say this again, there's only 2 scenarios here. You either have cash revenue, or you could have revenue, that's what they said, on credit or on account. And that's what this one is. On this one, it was just $11,000 of revenue. And notice they don't have cash, but they're using the accounts receivable. And then, of course, there's your fees income. Here's your debit to accounts receivable, which is, again, is an increase to accounts receivable. And then here's your credit to revenue, again, which is your increase to revenue. All right. So we'll do some more of those today. And then finally, eventually, what we'll have, and I'm just going to page down, I'm not going to go through every one of these again, but eventually what we'll do is we'll also look at a trial balance. And a trial balance, again, just list your accounts from your T accounts. Notice there's only one balance for each account. You'll enter those either as a debit balance or a credit balance. And then you want to add them up to make sure that the debits equal the credits. The trial balance is just a tool just to show you that the debits equal credits. It's not a financial statement. Nobody outside of a business or a company sees this. It's all internal, but it's just a trial balance just to prove debits equal credits. Okay. And then the last thing I just want to mention, again, one more thing, and then I'm going to get to a problem, is please don't forget our relationship. When we prepare an income statement, eventually we'll get to that income statement. time period stated, whatever you have on your income statement will be transferred to your equity statement. Most of the time you'll see net income, so they will add that. And then once you get your equity, that's the number that then goes to the balance sheet. If you look at the way the costs flow, you always go income statement flows to equity, equity flows to the balance sheet. Everything ends up on the balance sheet. That's kind of like the stopping point. And that's also why you'll notice when you see the dates where the income statement says month ended, the statement of equity says month ended, but notice that the balance sheet just says December 31st. So that should be noted. You should make a note of that because that's at one point in time. That's the actual date of the end of the period. That's taking a picture of what's happening at that company on that date. That's everything has been transferred to the balance sheet as of that date. Okay. All right. So I'm going to bring up, let me change my slide here. If there's any, does anybody have any questions as I'm changing this? I'm going to change my share in a moment. Does anybody have any issues or comments on anything I just said? Any questions? All right. So right now, you should see, this is going to be exercise 3.2. I'm going to go back over this again with you. And this is my T accounts I've set up. This is again just from an Excel spreadsheet that I just copied from the textbook. But I want to go through this again with you, and I want to work a couple of these. And please let me know if there's something you're not seeing. But if I start with this one, we'll go 5 transactions. It's pretty simple. And I like this one because I'm not only going to do the exercises for these transactions, I also want to show you how to get the account balance as well. So this is a nice little problem to demonstrate that. So if I start with number 1, again, Hayden invested $90,000 cash in the business. You should all be saying, again, if this was chapter 2 and you had the accounting equation, you would all say assets. You'd all say what? Increase or decrease? You'd say increase. You'd say increase 90,000 cash. And then of course you'd say capital increase. So if I went into my T account for cash, I'd go ahead and enter 90,000 as a debit cash, because we're going to increase cash. And then I'm going to credit capital for 90,000, and that formatting is off again. Let me just change that. All right. All right. So that's how you would handle that first transaction. So you say debit cash, increase cash, credit capital. On number 2, it said paid 30,000 in cash for equipment. So notice you got cash involved again. So this time cash is going to be decreasing. So I'll put 30,000 as a credit. And if you note a difference between this and the way I showed it to you in chapter 2, if you recall, is on the accounting equation, we would have put a minus. We'd say minus cash. Well, now we're not saying minus cash, we're saying credit cash, which means the same thing. All right, so if I credit cash, then I have to go to something else. So equipment's going to be the other asset account. So if I go to equipment, I'll say debit 30,000. Okay, and let me just do one thing. Make this a little bit larger if that's easy for you to see. So I'd say debit the equipment 30,000. Number 3, perform services for cash 9,000. So number 3, we've got cash, and of course you should say increase cash of 9,000. So an increase to cash will be a debit. You say 9,000 debit, and of course the offset to that should be your revenue or fees income. And so in fees income, if we have a debit to cash, we have to credit something else by the offset. So you'd say credit fees income 9,000. All right. Number 4, paid cash for advertising. Again, anytime you pay cash, you're going to be reducing it. That's a credit. So you'll say 3,800 credit. And then we have to have a debit to offset that. That debit would go to advertising expense. You'd say debit 3,800. All right. And then of course the last one said paid $3,000 in cash for supplies. Again, anytime you pay cash, you're reducing cash. So I'll put $3,000 as a credit. And then for supplies, I will put a $3,000 debit. All right. And I think we'd work part of this on Monday, but just to recap that would be how you go through and you do your T account analysis, they call it, by entering your appropriate debits and the appropriate credits. And that's all they wanted you to do in this particular transaction. But what I want to show you, if there's any questions, any issues, I know I went through this one pretty quick, but I think we'd seen part of it again on Monday. Does anybody have anything before I show you one more thing on this problem? Any questions? Again, remember, like if we were in class, if nobody has questions and it's silence, I assume you're getting it. I'm going to make the assumption that everything I just showed you is crystal clear. That's all I can read. So if nobody says anything, I'm going to assume my explanation is the best you've ever heard and you're getting it. And that's awesome. And so I'm not going to just, I'll keep asking, but yeah, if there's nothing, that's fine. All right. So let's say you just did this. And now what's going to come up in some of your homework problems, and it could come up in the quiz and the exam when we get there, is this concept of an account balance. Now, if you think back to your accounting equation, where you added up the columns and you said, what's your cash balance, what's your accounts receivable balance, and so forth, we're really doing the same thing, except in this chapter, we're doing it from a T account perspective. So if I looked at cash, I said, okay, guys, could you give me the balance for cash? And so what you want to do here is basically this. You want to add up your credits. I'm just going to show you this off to the side here. So I'm going to add up my credits. If I total my credits, I get $36,800. That's my total credits to cash. If I add up my debits, of course, we know it's going to be $90,900. But I want to show you this just so you see it. So all I did is I took my two debits, added them up, got $99,000. I took my three credits, added those up, and I got $36,800. So if I were to ask you, if they would say, what would be the balance for cash? What you do is you take the total debits of $99,000 and subtract out $36,800. And I'm going to do that right here. So I'll take $99,000 and subtract out the $36,800, and the difference is $62,200. And they would call that a debit balance for cash. And the reason it's a debit balance, first of all, is your debits are more than your credits. So you'll note that, again, $99,000 on the debit side is more than your credits. The balance always is going to go on the side that's larger, which it should be the debit side, because remember, the normal balance of any account is always said to be the increased side. Okay, so the normal balance is always the increased side. So cash is an asset. Asset balances increase with debits, so they should always have debit balances. Okay, and quite literally, that's how you do it. So this is a short one. It's the only account here that's got more than one transaction. So the balance for supplies is $3,000. The balance for capital is $90 credit. Advertising expense is $3,800 debit. Fees and income's $9,000 credit, and equipment's $30,000 debit. But this one's, I think, it's simple enough to show you right here. If there's ever any questions about how to calculate a balance, I just showed you, and this is for cash. But the way I just did this, that would work for any of the accounts you ever come across where they want you to calculate a balance. And I know there's some in your Chapter 3 Connect homework that will require you to understand that concept. Okay, is that clear? Not clear? Are we good? Anybody?
So if we was doing the income statement,
Yes.
which ones will we be putting like on the income statement, I guess? Like, would it be cash, equipment?
Oh, let me go back. I mean, are you talking about the PowerPoint slide that I just shared a minute ago?
Mm-hmm.
Okay, let me go back to that. Just so guys, I'm just going to page back to that
Yeah,
slide. All right.
that.
So what's going to happen? That's a good. I'm glad you brought this up. So if you notice the balance sheet right here, this again, this is just from the PowerPoint. Do you see where they list all of your assets? And so on this example, cash says a balance of 111,350. Okay. On this example that I just showed you, that I just worked out, hold on, let me change this. On this example, where we just came up with the 62,200, that would be the balance you would put on the balance sheet. If this was all of our transactions for the period, and we went to that balance sheet and we said, what's the balance for cash? You would say 62,200. So yeah, eventually what we'll do is all of these accounts, whether it's an asset account, a liability or equity, all of these accounts will have their own T accounts as well. And every T account will have a balance. And from that T account, that debit or credit balance, you're going to enter that for your balance sheet. That's what an accounting system is going to do. That's exactly what we're going to be analyzing. And if I page back, and I didn't walk you through all the different examples on this PowerPoint, but you can go back and watch the video on your time. But they give you a summary. This slide right here was just essentially was the summary of all the transactions for this particular company, this Eli's Consulting. And so this 111,350, again, that would have been the T account balance, similar to what I just showed you on exercise 3.2. But Taylor, does that help? I didn't confuse anybody. Does that help you in your question?
No, it did.
Okay. Anybody else have anything about that, about what I just showed you with how to calculate a balance? Now keep in mind, this transaction is only 5 transactions. Some of the transactions, you might, probably the longest one you'll get might be 15 transactions, where you'll have to keep track of all the different debit and credit postings. But you know, we always take baby steps when we start. We crawl first, so we're going to walk you through these as carefully as I can, and eventually once you practice these, you'll see more of these types of transactions, and then you can hopefully go back and use this as a reference if you get stuck. Okay. All right, was there anything else on 3.2? If not, let's do another one. So let's go to, well, here's one. Let me just pull this up. This again is in your book. This is exercise 3.5. And again, I'm not going to work this one out, but notice on this one right here is they give you a cash. They want you to determine the account balances. Notice how they've got cash. They've got 3 debits and 4 credits. And the way I just showed you to work it is exactly the same. You'd add up your debits, you'd add up your credits, take the difference, and your balance should be on the debit side. All right, so, but what I want to get to now, I want to practice some more of these with you. So I'm going to look at this exercise right here. This is 3.1a. I like to do this one, and then I'm looking at my time. I'm going to try to get us into Connect. There's a problem I pulled up. It's actually in your homework that I think might be worth going over with you. But let me check out this one. This is 3.1a. And let's check this one out. So, and again, just write out, if you're taking notes right now and you got a scrap paper, you got a sheet of paper, just as we go, just write the T account, write T account, write cash above it, and then, or whatever the account's going to be, and then just kind of try to follow along. I try to, you know, if I'm going too fast, please let me know. I don't want to go too fast, but I want to make sure I give you a couple different variety of exercises to look at. All right, so first one, you'll notice pretty much the same of all the problems. The owner starts the business. They make an investment. And so on this one, it says the owner made an additional investment of $42,000 in cash. So you go over to your T accounts. You've got cash as one account and your capital, your owner and then the capital. We know cash is an asset, and then there's your capital, which is your equity. we should all be thinking cash is increasing. And the way you increase cash, because it's an asset, is by simply saying debit cash 42,000. All right. And again, if anybody has any issues or questions on anything as I'm going through these, just let me know. One of the things about this problem is you'll notice that every time we do a transaction, we are simply creating a new T account. Eventually, you don't have to do that. Eventually, we'll just have one T account for cash, like I showed you on 3.2. But on this one, I just want to make sure, I'm going to go through another one, just to make sure you're understanding which accounts to pick up and should you be debiting or crediting the account. So this is just a very basic debit and credit T account analysis on this problem. All right, so if I debit cash, that means then that I have to do what to capital?
Credit.
Credit. And I just enter the credit just like that. All right. And just so you know, I think one of the problems or questions that came up this week was, you know, a student was confused just about like for example, cash. They were still confused about why we're debiting or crediting cash. And just remember, your first avenue, the first thing you do is when you look at these problems, is you got to classify, you know, is the account an asset account or a liability account or an equity account? Figure out which item it is. Once you put it under that asset classification, you just follow the debit and credit rule, increase or decrease, and follow the rule that I gave you. So assets, remember, always increase with debits and decrease with credits. So I think they were having a problem with just they didn't understand the classification. So that probably would be a good starting point if you get stuck on these. On the second one, they bought equipment for 20,000 cash. So you know it's equipment and cash. So I got equipment and cash. And so we got to increase one and decrease the other. Debit one or credit the other. And so we should all be thinking our equipment is increasing. And the way you increase an asset is with a debit. So you simply say 20,000, and that by default, I don't know why it's putting a plus, but I didn't put that format in there. But you don't really have to enter a plus in there. By default, by putting it on the debit side, it is increasing. So therefore, for cash, because I debited equipment, I've got to put $20,000 into cash. And the reason I think it's formatted that way is I copied this from the textbook solution manual. I just took out the answers. I would prefer you don't put a minus there. I know why they're putting a minus. I'd prefer you don't put a minus there because I think that might confuse some other people. Just remember, if you just put 20,000 in alone, that represents a credit to cash represents a decrease by itself. Okay, so let me just take that out so that people don't get confused with that. All right, so 20,000 credit, 20,000 debit. 20,000 debit to equipment, credit cash 20,000. All right, 3. It says they sold some furniture for $3,400 in cash. So I would go to cash, and you should be thinking cash is increasing, and it's an asset. So therefore, you have to debit it. There's my debit. Office furniture, which is another asset, which is being sold or reduced, should be credited. So there's your $3,400 credit. And of course, I'm not going to worry about the format, but again, that's a credit. So here's your debit of $3,400 and credit of $3,400. So debits equal credits. 4. A firm purchased a computer for $3,700 to be paid in 60 days. So this one, they're going to put this under the classification of equipment. When it says to be paid in 60 days, that means it's accounts payable. It means we have not paid it yet. That's going to be debt. We're going to be increasing our debt. So number 4, we're going to be going office equipment as one account and accounts payable as another one. So we have to. Go ahead.
Will office equipment be under credit this time?
Well, ask yourself this. Office equipment is an asset.
Mm-hmm.
and they're buying an asset. So they're going to basically be adding this asset to their business.
Okay, so
What do you think?
so it'll be under debit.
There you go. So you'd say debit, and that's essentially, that's how you do it. You go back and think in terms of what should be increasing or what should be decreasing. So if I go to office equipment, here's number 4, we'll say debit 3,700. That's an increase. And because we debit it, we have to credit something else. So by just by default, we know we have to credit accounts payable. We have to. But just for understanding, it should also hopefully make sense because we're increasing our debt, we're increasing accounts payable, we have to credit it. Okay. All right, so that's number 4. Oh, and then another thing I'll just mention, another thing that typically comes up on these type of problems is that a student or somebody might ask, well, how do I know what account name to use? Well, guys, eventually that's not going to be a problem. Eventually in the problems, they'll give you all of the account names. So you won't have to make up an account name. Because some of you might have thought, well, on this one, if a firm purchased a computer, why not just use an account name called computer, which you could. But you're not going to have to worry about the account names, account titles on an exam. They'll give those to you. You just have to know, pick which one to use and recognize, of course, if it's an asset or a liability or an expense account or whatever. And then, of course, apply the debit and credit rule. Okay, 5. Notice on this one, it says purchase office equipment for $22,400 on credit. The amount is due in 60 days. So this is number 5. Again, we have office equipment again. And notice, do you see how they worded these different? On number 4 and number 5, they're both accounts payable. But at number 4, they didn't say bought it on credit. They just said to be paid in 60 days. On number 5, they said on credit, and then they say the amount is due in 60 days. So I believe they're just trying to give you different ways to read, various ways they can word the problem. So don't let that confuse you. They're both accounts payable. They could have just said a firm purchased office equipment on credit and stopped right there. And just by saying that, you should know it's accounts payable. So if I go over to number 5 and I say, okay, so just like number 4, we know that office equipment should be debited because we're adding it. And then we're increasing our debt by $22,400 as well. Okay. Number 6. Notice number 6, we've got James Taylor, owner of Taylor, says withdrew $12,000 of his original investment. So they're telling you number 6 that this one is going to be a personal withdrawal. And please note on number 6, do you see the account name they're going to be using for the personal withdrawals? They just call it drawing. Okay. So just kind of know that account name. So that's a new one. So you got drawing and cash. Drawing is going to act or behave just like an expense account. So, and then of course we know what cash is. So if cash is being taken out of the business, it's reduced. So therefore you're going to have to credit it. Remember, so you're going to credit cash anytime it goes down. So you have 12,000 credit, because they put a minus, but just 12,000 credit. And then by default, you're going to have to debit drawing. So you're increasing drawing, which is kind of like increasing an expense because you're reducing equity. When you debit drawing, then you have to credit cash. All right, so that one's kind of new. So, but just remember, drawing works just like expenses. All right, 7. It says a firm bought a delivery truck for $38,500 on credit. Payment is due in 90 days. So notice they're saying you're buying something just like in number 5, you bought it on credit. Number 7, you bought a truck on credit. And so they're saying use delivery truck, that's the asset account. And then on credit, we know to being accounts payable at this point. Truck is an asset. We're adding the asset just like we added equipment. So just like this in number 5, we're going to be debiting truck. And if you debit truck, again, this will be $38,500 debit. The offset's got to be a credit to accounts payable of $38,500. Okay. The last one on number 8, and then I'll see if you have any questions, and I'm going to try to get us into Connect for a minute. Number 8 says issued check for $7,200 to a supplier in partial payment of an open account. They mean by that is you're paying your accounts payable. So you know you're going to have cash in accounts payable, and we know that cash is going to be reduced. So to reduce cash, you have to credit cash. And if I credit something, I have to debit something else. So remember, to reduce accounts payable is to debit it. So if I enter that, debit accounts payable, notice they put that as a minus just to kind of show you that that's reducing it. In all intents and purposes, you just have to put 7,200 in there. A debit to that account means reduce. And accounts payable, I go ahead and enter the credit, and then then you're done. Okay. All right, now the way this particular problem works, this is 3.1a. This just took these individual, every time we did a transaction, you just write a new T account and then record the appropriate debit or the credit. And you all know eventually what you'll do is you'll just have one T account for cash and one T account for office equipment. Like for example, on this one, you very easily could have just had one T account for office equipment, and then you would show 2 debits to that T account. Okay, and that's essentially what we're going to be doing eventually. But for now, I'm more interested in you understanding just knowing what to debit and what to credit. That's probably a bigger deal, but later on we will get to that other format, just like I showed you earlier today. All right, were there any questions on this? There's a couple problems I want to show you and connect. I know I got about 9 minutes, but were there any questions on anything that I just put up on this problem 3.1a? Does anybody have anything that they would like me to comment on?
With the balance sheet would be the same as if we did the 3.2.
Yep.
It would be the same, right? Okay.
Yes. Think of problem 3.1a as we're simply just practicing debits and credits. Just a very simple, take a transaction and record the appropriate debit or credit. Write a new T account every time, just practicing debit and credit. But eventually, let me go back, eventually we'll get to something like this, where you can see, this is exercise 3.5, where you can see how they have cash and you have all these debits and credits. You've got fees, income, you have 2 credits. You'll just have one cash account. You'll just have one equipment account, and then you'll have all your debits and credits summarized, and then eventually you'll come up with those account balances. Okay. But for right now, I'm just want to make sure you understand what should be debited and what should be credited. That's probably the biggest hurdle for most people if they get stuck on this stuff. This stuff right here is, comes usually pretty easy, but it's the debits and credits when you're first starting it that usually throw people off. That's why I'm doing it like this. Okay. Was there anything else, Taylor, or anybody else before I want to at least bring up 1 or 2 Connect problems with you today? Anything?
No, I'm okay.
Guys, is my voice coming in clear today?
Yes.
Taylor says yes. Everybody else, it's interesting, in this, I was talking in these live virtual lectures, and I don't, if, everybody's got their videos off, and that's fine. But unless you guys say something, I can't, all I see is a blank screen when I see a box, and I can't read your facial expressions. Usually, like in class, I can kind of tell, and I can see if you're getting it or not. But that's the one, I think, downfall of this section. If I can't see, if you don't ask, I don't know exactly if you're getting it yet or not. All right, so let me do this. So let me get out of this. I'm going to close a couple things. I want to get into, I'm going to open up my Connect, and then I'm going to share my screen with you. Just give me a quick moment. Sometimes as I talk, it'll kick me out because there's like a time period, but I'm going to get into your chapter 3 homework. And of course, some people have actually already started some of this. I'm going to try to get into, pull this over. And I'm going to go into your view. All right. So let me double check my screen and make sure you guys can see this. and please let me know if you cannot see this, and this is everybody. You should see chapter 3 homework. It should say problem 2. This is the exact problem you'd be working if you were doing it. And they give you, again, 5 transactions. I think this is the one. Actually, hold on. I pulled it from. But can everybody at least see that? I'll make sure I got the right screen pulled up for everybody. If you don't see it, let me know. All right, this is the one I want to look at. All right, this is number 7. And you got 8 transactions, and you'll notice when you pull this up in your Connect homework, they give you, essentially they give you the T account. Now I want to show you this because some of my students who have actually already attempted some of these exercises, they thought they had the right debit and credit entered, but the problem came up and said that they were getting it wrong. Something wasn't right. They did not understand what was incorrect. And the problem was they forgot to enter the account name. So here's how we do this. So we've got 8 transactions, but they summarized them already on number 1 through 8 here. So let's start with number 1. Let me show you. This is how you do this. It says Serena Hamilton, an owner, made an additional investment of $42,000 in cash. So you actually have to type in cash here. You click this box, click the down arrow and put cash. Over here, you click another box and you'd be looking for capital. So, and some of the students didn't know they had to do that. So I'm just kind of giving you guys a heads up. You have to actually enter a drop box, click the arrow and click the appropriate account name. So and notice it says, and this is important because you'll miss it if you don't, it says, select the debit account first, then the credit account. So the way they're going to grade you is whatever account gets debited, they want you to put that in this column, all right? And then your credit accounts, they want you to put those using these T accounts. In the real world, it doesn't matter, but that's just how they want you to do it in terms of this homework. So if I went to this cash account, of course, you'd have to say, okay, cash should be what? Debited, because it's increasing. You simply enter 42,000 and then as a debit, and then you go to capital and then enter $42,000 as a credit. So that's just like I just showed you, but that's essentially what your homework is going to be doing. This is very similar to problem 3.1a, where you just have to basically, each one of these individual transactions, you have to enter the same T account again. Like on number 2, same thing. It says a firm purchased equipment for $20,000 cash. I know that equipment should be debited because it's an asset. So I'd find the equipment account. I'd put a debit of $20,000, enter that there. And then I go to this T account. I'm looking for cash right there. Enter the credit. And then that's what you'd have to do. Okay. So just kind of giving you a heads up when you start to practice some of your homework, in case you get some of these feedbacks and you're not quite sure why something's wrong. That's been a consistent problem that students have. They forgot to enter these account headings. So when I say account heading, you've got to have a name at the title of each T account. Okay.
Do the order matter? Like as far as, okay.
On this one, it does. On this one, I'm just saying the instructions say you want to always put your debit accounts, the accounts that are going to be debited, they want you to put that in this column. Okay?
Okay.
So notice, for example, and I'm going to do this, I'm going to intentionally do this incorrect. Okay, number 3. On number 3, where it says a firm sold some office furniture for $3,400 in cash, I know cash should be debited, right? But if I went and entered office furniture right here, and if I put a credit right there, even though you're correct in saying office furniture should be credited, Connect would mark that as incorrect. Only because they want you to say cash, debit, that's what they want, and then they want you to say office furniture, credit. And the reason for that is you'll find out eventually is when we get to journal entries in chapter 4 later in a couple weeks, the accounting people always want you to do debits first. That's just their format. That's how they want you to do that. All right, so I showed you a couple of these on this homework, but at least I wanted to show you that I think if you haven't yet, hopefully you can start to get in. This is for everybody. You can start to get in and start to practice your Connect homework assignments. But this is number 7. You'll notice number 8 and number 9, you're essentially doing the same thing. They're all practice problems where you've got to go to these T accounts and enter the debits and credits. These are really good practice problems. So that's just one thing to kind of give you. Additionally, just because I know I got about a minute left, again, I'll put another I'll post an announcement this week just to remind you some things about our next session, again, upcoming on Monday, because I know it's fast. But just remember, your Chapter 2 assignments are due by Sunday if you haven't done those yet. We will continue Chapter 3 on Monday as well. So please practice as much as you can, take some notes, come up with some questions to ask me if you're not seeing it. You don't want to wait to the last minute to ask a question because, you know, I do believe we've got this week's basically almost over, but next week we will be finishing Chapter 3, and then Exam 1 is right around the corner. Okay, Exam 1, if you go back and review your syllabus and our schedule, Exam 1 is Chapters 1, 2, and 3. So probably in about a week and a half, you'll be assessed by taking Exam 1 just to see if you guys are getting it or not. And remember, I only give you 3 exams, so you don't want to mess it up. So it's good to ask, it's good to practice, and ask me if you're not seeing it, just let me know. And I know 15 minutes is fast, but you can always email me with questions, watch my videos, and so forth. So, all right. So I know some of you may need to leave, but does anybody have any questions or comments about anything I just put up?
No, I have a question on this one as I was just looking at 9, and it say for number 8, bill client for 12,000 fee for preparing a comprehensive financial plan. See,
Okay.
that threw me off because.
Okay, let me page down there. So, because I like how this one has the summary transaction on top of each T account. So on number 8, when it says they billed the client for $12,000 for preparing a comprehensive financial plan, what they mean by that is, first of all, it's revenue, okay, because that means that anytime you're billing a client means that when they prepared something, that means they've earned the money. But the fact that they billed the client, that means that they haven't received the cash yet. So on this one, you're going to have accounts receivable. You'd say, go to my accounts receivable account, which is an asset. You'd say debit 12,000, accounts receivable. And then on this one, I'm looking for the revenue account, and it should be fees income. And then you'd credit it for 12,000. So this is a good example of, we haven't seen them describe an accounts receivable revenue like this just yet. All they do is say bill the client. But they're implying is if you're billing them, that means that the client owes you money. You simply just sent them the bill in the mail. It's like if you went to the dentist and you got your teeth cleaned, or if you had a tooth filling or whatever, later on the dentist will bill you how much you owe them. But in the meantime, before you've actually paid them, you're an accounts receivable on their books. And that's all they're saying here. Accounts receivable, debit, fees, income, credit. Taylor, does that help a little bit?
It did.
Does anybody else have any questions? I know some people have to leave. Anything else on anything that I just showed you? All right. If not, that's good. I mean, well, I always say, make me work harder. Make me work for my money. I'll do anything to try to help you guys explain this concept to anybody. Forrest, do you have a question? No? Sometimes I see the green box light up. I think somebody's getting ready to ask something, but like I said, I can hang on for a few more minutes if you need me to, but if not, that's fine too.
Okay, I would just email if I have a question, because the last Connect and the quiz that we took, I did okay, but it was some stuff that I didn't. It just became too much, and it kind of threw me off with all the wordings. Yeah,
and guys, I don't think I mentioned this last week, but I know we have a tutoring service as well. The problem is that because we're a district-wide program, And I don't think they had our textbook yet. I think we had the tutor get a copy of the textbook, and I'm not sure that they've got the textbook yet. I should find that out today. And if they've got the textbook, then I'll put the link up on Blackboard. And it's online tutoring through the college. But I'll try to find out today more information on that, and I'll get it to this class. I'll just put it out there on Blackboard and send you guys in an email if I can get that information, if anybody needs extra help. So I had some of my other class that was asking for if there was tutors, and there is an online tutor. But the problem was that they didn't have our book yet, because everybody, just because you're at for example, if you were at Forest Park versus Merrimack or Flow Valley, each campus can still use a different textbook. And so they were trying to work through all that. So once the tutor gets our textbook, because they have all our solutions, they should be able to set up that tutoring sessions for you guys as well. So just let me know, but I'll try to find out today on the tutoring services. And if I get that information, I'll go ahead and put it on Blackboard if anybody's interested. All right. You guys are a little quiet today, that's fine. But if there's nothing else, it's about 10:55. Nothing else, we're good? What I tried to show you today, you know what you need to be doing for Monday. Our next session will be on Monday. Okay, good. If there's nothing, so keep practicing. Don't be shy, email me. Hopefully I'm pretty consistent with replying to your emails as quick as I can get them in. So, all right. If there's nothing else, guys, then, hey, look, have a good day. Like I said, I check the emails almost up through midnight till I go to bed. So let me know. All right. Have a good one.